Welcome everybody. This is the first educational video about the new FTI version 3 Fibonacci Traders indicator version 3. We will go over everything that we need to know until we will know how to use it perfectly to our advantage. This is the SPY without any indicators. Now we go over here. We have our invite scripts only. For now it's invite script. We add it to our favorite and then we can add it to our chart, and this is how it looks. Okay, we have trend lines, we have the Fibonacci levels, and we have buy sell signals, and we have this line which is our stop loss. Now as you can see, it works on the daily, it works on the weekly. It adjusted itself, everything is automatically, we do not need to do anything, and it works only on the 15 minutes intraday levels like this. It works also on the Bitcoin if you want to trade Bitcoin, no problem, it works on Bitcoin as well. On any time frame, intraday, 4 hours, daily, weekly, monthly, on anything that you want to trade. You want to trade Forex, no problem. It works also on Forex. As you can see, this is Euro USD, 1 month, weekly, 4 hours, 5 minutes. So it works on everything. You don't need multiple indicators. You don't need anything else. You have everything under one roof. Now, let's dig in. Let's go back to the SPY. More easy. Everybody knows the SPY. Let's go SPY on the daily. Let's start with the daily chart. Now, if you want to adjust some settings, double click. And here you have all the default settings. All these default settings is default because I found them the most reliable settings for the FTI version 3. You have here the ATR multiplier. The ATR multiplier is this stop loss line. If you want to give more breadth to your stop loss, you adjust it to a higher value. If you want less, you go less. In my opinion, 1.1 works best for swinging on a daily chart and day trading on every time frame for day trader, whether it's on the 60 minutes, whether it's on the 15 minutes, 5 minutes, or even 1 minute. The 1.1 value on the ATR works perfect. You can adjust it if you want. 1.5, and then you have it. It's between 1.1 and 1.5 according to the time frame that you're trading. Next, we have the auto fib length. Before we dig in the auto fib length, we have all these Fibonacci levels. These are the default Fibonacci levels. These are all the most significant levels of the Fibonacci. We have between the 0 and the 1. We have the 0, 236, 382, 50, 618, 786, and 1. The extensions 1.272, 1.618, extension 2, extension 2272, and extension 2608. And we have the reverse. What does it mean? First, it calculates, in this case, let's go back to the daily and the SPY. We have the daily and the SPY. Now it depends how further left you want the Fibonacci levels to be calculated. Then you have the auto fib length. You have 8 candles back, 13 candles back, 21, 34, 55, and 89. The higher the number, the further this indicator goes back, and now it's looking 34 last candles on this time frame It goes back 34 candles and it looks for the recent high, recent low, and the last 34 candles. If you go further back, double click, further back, 89 candles, and it's still the best swing low, swing high. This is for the 89. It means it gave us from the low of October, and the last high is Friday's high, the all-time highs. And as you can see, it gives us in the middle all the support and all the resistance. Now that we've established the time frame that we want to trade, how many candles back? Let's go back to 13. In my opinion, on the daily and on the weekly, 13 is the best value. Of course, you can change it. Now, we have also the reverse button. What is the reverse? Look at the chart. For now, it gives us all the resistance, potential resistance to the upside. Now, if I want to go short or just check what are the support below the 466, all I need to do, uncheck the reverse and it goes to the downside. Now, source is closed because the only thing we care about is where the candle closed, and then the Fibonacci will adjust itself and the candle close. Also, we have channel settings. Now we have the channel settings. We have this, use long-term channel. What does it mean? In long-term channel mode, if we cannot see, if the channel is not visible, we need to scroll back on the chart for additional historical data. What does it mean? We have here the chart, but we want a longer time frame chart. We just click on this, and now it goes way back and went to look for the higher highs for a channel that started over October 2022, right? A longer time term channel. If we uncheck, it goes back to the most recent uptrend channel. Now, what is the deviation multiplier? Deviation multiplier, as you can see, it's the distance between the highs and the lows for the channel to be calculated. Less deviation multiplier and the channel goes much more thinner. 2, as I found out, 2, between 2 and 1.8 is the most significant values on the daily and also on the intraday levels. Here you can change your colors as you want. Extended right, extended left, extend both ways if you want. So it will go infinite to the right, infinite to the left. You can feel the inside of the channel. You can do the line less transparent or more transparent. The higher the value, the more transparent it is. Look, the less the value, the lower the value, it becomes less transparent. Here you have the middle line settings. Transparent, line width. If you want it to be more wide, less wide, solid, dotted, dashed, transparency mode. Same as this one. The higher the value, the more transparent. The lower the value, the less transparent. Now let's talk about the styles tab. You have the plot. These plots, look at the chart, is the 0 and 1 values for the Fibonacci. Without them, no 0 and 1 values. This is the 0 and 1. It always needs to be checked. Uptrend is this line. What is this line? This line is calculated based on the ATR, same as we saw here. Okay, and this is your stop loss. What does it mean? It means that if you went long on SPY during Friday for swing, your stop for now is here at the 472. If you want to day trade on the SPY and you went long above the 482, you need to see where is this line. This line is your stop loss. You don't need to think. Where is my stop loss? Here, 481.21. Okay, so we don't need to think. And also on the 15 minutes, as you can see, as long as we are above a buy trend, we're good to go long. Same goes for everything. If we want to day trade Tesla, for example, we have a buy signal. If we bought Tesla for day trading, we need to check this line, and this line will give us where should we put our stop loss. Let's take a look on the daily ESTC. We are above, we're inside uptrend channels, right? We have this uptrend line, we have this uptrend line. Maybe we can adjust this one a little bit better. Let's make deviation 1.5, and as you can see, okay. Now, this is the trend line for support. This is the next trend line for resistance. We also have the 0, the 236, 382, 50, 618, 786, and 1. Now, we have a very important area, the yellow zone. This yellow zone is a very important area of support and resistance. It gives us another indication where we should go long, where we should go short, and where to put our stop loss. We have a buy signal. Once the price goes back inside, as we saw here, back inside or breaking below this yellow zone, we are getting a sell signal. So if we are long an ESTC, last Friday, for example, if we went long on ESTC, our stop should be according to this line. It prevents us to think. Why? Because if we will close below this trend line, we are entering the yellow zone, and this stop loss line warns us, be careful, you're breaking an uptrend channel, uptrend line, and you're entering the danger zone. So maybe you sell, maybe it's time to manage your risk much more carefully. Back to the settings, we have the uptrend line, we have the buy signal, we have the downtrend, which is basically the same as the buy. If we want to go short, we need to break below, and if we need a sell signal, breaking below the yellow zone, managing risk, and look left where price came from, but it gives us a better understanding where are we, and less thinking. Lines, we need the lines. We can use the line fills. Line fills, which means here, we go here once again, and we can do line fills. The lower the value here, as you can see, it's filling up. The area is filling up, and this area is an uptrend. Now, for example, how do we actually work with it? How do we make decisions according to the FTI version 3? Let's take, for example, PLTR on the daily. I want to swing trade the PLTR. So first I need to check the daily and the weekly. What do we see? First, we add the FTI version 3. On the daily, very steep downtrend. We can also adjust it for 1.5, and it will be a little bit more accurate, right? Now, we got ourselves a buy signal on the daily on PLTR. Friday, it closed above the yellow zone, but we are still inside this downtrend channel. This is why on the weekly we are still under a sell signal. It doesn't mean that we need to go short, but if we are looking at the daily and we want to go long according to the daily, we need to wait also for a buy signal on the weekly, and we need, at least in my opinion, we will get the buy signal only 2-3 days going back inside the yellow zone. And then once we have buy signal on the weekly, buy signal on the daily, then we can start taking long on PLTR, managing our risk. How? We don't need to think. We have this line. This is our risk management line. And as you can see on PLTR, we need a little bit more breadth. So adjust it to 1.5 to escape this touch and bounce. And this is how you adjust the ATR to be your stop loss. Stop loss is trader's best friend. Now the true magic comes to life when we add another FTI version 3, 2 FTIs together. We have this one, adjusted ATR 1.5, we have the auto fib and 13, all the Fibonacci levels are marked. We have deviation multiplier 1.5. Now we add another one. This one, you see, we need to adjust here to be the same ATR, auto fib length 13, and we do not need the middle Fibonacci levels between the 1 and between the 0 and the 1. We don't need them. What we need is to uncheck the reverse and all the extensions to the downside, and this is how it looks. Now you can see we have 2 channels to the downside, downtrend channel, inside the downtrend channel, and we have all the levels to the upside and all the levels to the upside. And if, for instance, the inner channel is 1.5, the outer channel should be 2.2. Okay? So now you have everything that you need.